Hey everyone, welcome back for another deep dive. Today we're going to be looking at why some industries seem to have a revolving door of businesses coming and going, tons of startups, but then lots of companies shutting down too.
It's a great topic, and we've got a fantastic paper to help us understand what's going on.
Right. Entry, exit, and investment-specific technical change.
Yeah.
I mean, the title alone sounds pretty intense.
It does, but don't worry, we'll break it down. It was published in the American Economic Review, which is, one of the top journals in the field.
Absolutely.
Yeah.
And they've looked at data from 18 European countries, both manufacturing and service industries. So we're getting a pretty broad perspective here.
Definitely. This isn't just about one specific sector or one particular country. It's about trying to uncover some fundamental economic dynamics.
Okay, so let's get into it. The paper focuses on something called investment-specific technical change, or ISTC for short.
Right. Now, ISTC might sound kind of jargony, but it's actually a pretty intuitive idea.
Okay, good. I was hoping you'd say that.
Think of it this way. How fast is the technology used to produce the tools of an industry changing?
The tools.
Yeah.
Not the products themselves, but the machines and equipment used to make the products.
Exactly. So how quickly are those essential pieces of equipment evolving? That's what ISTC is all about.
Got it. So if the tools are rapidly changing, that means high ISTC.
Right. You got it. And what the paper finds is that ISTC is a major predictor of how much churn an industry experiences. High ISTC, lots of businesses entering and exiting. It's like a constant game of catch-up as companies try to stay ahead of the technology curve.
Okay, that makes intuitive sense. So are we talking about like totally new inventions here or just improvements to existing technology?
It can be both, actually. Sometimes it's a brand new machine that revolutionizes how things are done. Other times it's incremental improvements that make equipment cheaper and more efficient. But either way, it puts pressure on companies to adapt.
I can see why this is important. Can you give me a quick example of an industry with high ISTC and one with low ISTC just to make this concrete?
Absolutely. Think about the solar panel industry. In the last 10 years, solar panels have become drastically cheaper and at the same time more efficient.
Oh, yeah?
That's high ISTC in action, and it's been a huge driver of growth in renewable energy.
Okay.
Now, contrast that with something like the tobacco industry. The basic technology for making cigarettes hasn't really changed much for decades. That's a low ISTC industry.
So that helps explain why we see so many new solar companies popping up while the tobacco industry is much more stable.
Precisely. And the paper actually found some pretty big differences in those entry and exit rates across industries.
Look at that.
They found that in the 1960s through the 80s, the 5-year entry rate for the scientific instruments industry was a whopping 60%.
Wow.
Compared to only 21% for tobacco.
That is a massive difference.
Yeah.
So how do the researchers actually measure this whole ISTC thing? It seems tricky to quantify technological change,
Yeah, it's a good question. What they did was focus on the price decline of equipment in each industry,
Yeah.
but adjusted for quality improvements.
So it's not just about getting cheaper. It's about getting cheaper and better.
Exactly. It's a method that's been used in other economic studies, and it makes sense intuitively.
Yeah, totally.
Yeah.
So if the equipment is getting cheaper and better, that signals rapid technological advancement, high ISTC.
Exactly. It's like if you think about the price of a smartphone today compared to 5 years ago, the price has probably gone down, but the features and process power have gone way up.
Yeah, true. That's a clear sign of technological progress.
Exactly.
Okay, I'm with you so far. High ISTC equals a lot of churn in an industry. But why? Why does rapid technological change lead to so many businesses entering and exiting?
It's because it creates what the researchers call a vintage effect.
A vintage effect. What does that mean?
Well, imagine trying to compete in a Formula One race with Model T.
Yeah.
You're going to be left in the dust.
Yeah. So companies with older technology get left behind as newer, cheaper, more efficient equipment comes along.
Exactly. They start to become less profitable, and then they face this tough choice. Adapt or die, so to speak.
Okay, so what can they do? What are their options when they're facing that kind of pressure?
Well, the research points to two main paths. One is to just exit the industry altogether as profits shrink. They essentially just throw in the towel and close up shop.
That makes sense.
The other option is to invest heavily in upgrading their equipment to the newest technology, essentially trying to stay ahead of that curve.
Like go big or go home. High ISTC industries sound kind of intense for businesses.
They can be. But here's where things get a little unexpected. The research found something surprising about countries with high barriers to starting a business. You know, those with lots of bureaucratic hurdles and fees.
Yeah.
You'd think that high ISTC, with all that innovation and change, would just like steamroll over those hurdles, right?
New cutting-edge companies would still want to jump in and disrupt the market, even with the high costs.
You'd think so, wouldn't you? But that's not what they found. They found that in countries with those high entry costs, there's actually less pronounced turnover in high ISTC industries.
Wait, really? That's counterintuitive.
It is. It's like those high entry costs are acting as a brake pedal on all that dynamic change you would expect.
So how do they explain that?
Well, to understand it, they built an economic model. It's designed to simulate how businesses make decisions about entering and exiting and about investing in new tech.
Oh, wow.
And they looked at different industries, some with high ISTC, some with low, and with different entry costs. By running these simulations, they could isolate the different forces at play.
That's clever. So what do they find? What does the model tell us about this entry cost puzzle?
Well, it turns out that when entry costs are high, it's actually more attractive for existing companies to just upgrade their technology rather than leaving the industry altogether.
Oh, interesting. So instead of like throwing in the towel and letting a new competitor come in, they just try to keep up with the latest tech themselves.
Exactly. And that way they can maintain their position in the market, even if it's expensive to upgrade.
So those high entry costs are kind of like a protective barrier for the companies that are already in the game.
You could say that. It creates an incentive for them to invest and adapt rather than just giving up.
But wouldn't that potentially slow down innovation overall? If it's really hard for new companies with new ideas to enter the market, wouldn't that lead to kind of a stagnation?
That's a great point. It's a trade-off that policymakers have to think carefully about. High entry costs might lead to some stability in the short run, but they could also create a less dynamic and innovative economy over time.
Yeah, that makes sense. It's tricky. So for someone who's listening to this, what's the takeaway? Should they be thinking about ISTC when they're making investment decisions, or is it just like interesting academic theory?
Oh no, this is definitely relevant for real-world decision making. Whether you're an investor or an entrepreneur or even just someone trying to understand the forces that are shaping the world around you, ISTs can be a really valuable lens.
So how would someone figure out the ISTC of a particular industry? Is there like a simple way to do it, or does it require a lot of research?
You don't need to be an economist to get a general sense of it. Just start by looking at how quickly the technology is changing in that industry. Are there constant innovations and upgrades? Are the tools and equipment getting cheaper and more efficient over time? If so, that's a sign of high ISTC.
Okay. So for example, if I was thinking about investing in, say, the electric vehicle industry, I should pay attention to how fast battery technology is evolving and how those improvements are affecting costs.
Exactly. You're on the right track. And of course, high ISTC doesn't automatically mean it's a good investment. It just means it's likely to be a more dynamic industry with more potential for both growth and disruption.
So you got to weigh those factors against your own risk tolerance.
Exactly.
Makes sense. But, you mentioned earlier that this paper kind of sparked some even bigger questions for you. Something about zooming out to look at entire countries. I'm curious, where does that line of thinking take us?
This is where things get really interesting. So far, we've been talking about how ISTC affects individual industries.
Right.
But what if we think about the average ISTC across all industries in a particular country? What if some countries just have consistently higher ISTC than others?
Interesting.
What would that mean for their overall economic growth, their social structures, their place in the global economy?
It's like taking this concept we've been discussing and applying it on a much larger scale. Are there any real-world examples of countries that seem to really embrace high ISTC across the board?
Well, it's not always a straightforward comparison, but I think you could argue that countries like South Korea and Taiwan, for instance,
Okay.
they've really invested heavily in technological innovation across lots of different industries.
They have.
And they've seen tremendous economic growth and become real leaders in areas like semiconductors and consumer electronics.
Right. So are you suggesting that there's like a correlation between a country's willingness to embrace technological change and its overall economic success?
It's a compelling idea and one that deserves more exploration. Of course, there are lots of other factors that contribute to economic growth, political stability, education levels, access to resources. But it's hard to ignore the role that technological innovation has played in the success of these countries.
Absolutely.
Yeah.
It makes you wonder if there's like a tipping point, right?
Right.
Like, is there an optimal level of ISTC for a country to have? And what happens if a country falls behind in that global race for technological advancement?
These are really important questions that economists and policymakers are trying to figure out, especially now with all the rapid advancements in artificial intelligence and automation. The choices we make today are going to shape the future of our economies and societies for a long time to come.
It's exciting and also a bit daunting. We're in the middle of a technological revolution, and there's so much potential, but also so much uncertainty.
Yeah, absolutely. And that's why it's more important than ever to understand these dynamics.
You know, one thing that struck me about this research paper is that it doesn't really provide all the answers.
Yeah,
It actually raises more questions than it answers, but I think that's actually a sign of a good paper.
I totally agree.
It makes us think critically and dig deeper. It's a reminder that learning is a journey, not a destination.
Well said.
Okay. Well, on that note, I think we've given our listeners plenty to chew on for now. We've explored the dynamics of ISTC, its influence on business turnover, and its broader implications for industries and even entire countries.
We've seen how technological change, specifically in the tools that businesses use, can be a powerful driver of economic dynamism.
And how it also creates some pretty big challenges and opportunities that we need to be prepared for.
Exactly.
So as you go about your day, dear listener, keep an eye out for ISTC in action. Notice which industries are changing rapidly and which ones are more stable. Think about how technology is affecting your own work and the choices you make.
And don't forget that big question we posed earlier. What happens when entire countries embrace rapid technological change, or maybe even resist it? What kind of future are we creating, and what role do we want to play in shaping that future?
Great questions. Keep thinking about those, and as always, keep diving deeper into the complexities of our world.
Yeah.
It's like we've zoomed out from individual companies to entire countries. But you're right, we haven't really talked about the impact on everyday people.
And that's really what matters ultimately, right? I mean, economists can talk about ISTC and growth and all these abstract concepts, but those forces have a very real impact on people's life, their jobs, their opportunities.
Exactly. So let's bring it back down to earth. What would you say to someone listening to this who's thinking, okay, this ISTC stuff is interesting, but what does it mean for me?
Well, first of all, I'd say it's empowering to understand these forces, even if you're not an economist,
Yeah.
Just recognizing the role of ISTC can help you make sense of the changes that are happening all around us.
So instead of feeling like we're just kind of being tossed around by the waves, we can actually see the currents and how they're shaping the world.
Exactly. And that understanding can help you make better decisions about your career, your investments, or even just how you interact with the world.
Can you give me a concrete example? Like, how could understanding ISTC help someone make a career decision, for instance?
Sure. Let's say you're trying to decide between two different career paths. One is in a traditional industry with pretty low ISTC.
Okay.
Think like manufacturing, basic household goods or something. The other is in a field with high ISTC, maybe software development or renewable energy.
Okay.
Understanding ISTC can help you anticipate what kinds of skills are going to be most valuable in each of those fields.
So in a high ISTC field, you'd probably need to be really adaptable, constantly learning new technologies.
Exactly. You'd have to be comfortable with change, with a certain level of uncertainty, but the potential rewards could be greater too, right? More opportunities for growth, innovation, maybe higher earning potential.
Right. It's like choosing between a steady job that's maybe a little boring versus one that's more exciting but also riskier.
That's a great way to put it.
And ISTC can help you figure out which path is the best fit for you.
Exactly.
This has been so insightful. When we started this deep dive, I was really curious about those wildly different entry and exit rates, tobacco versus scientific instruments, night and day. And now we have this whole new way of understanding it, all thanks to ISTC.
It really is amazing how a simple question can lead to so many new insights.
It is.
And that's what I love about economics, It helps us see the connections between things, the forces that shape our world, and how they affect us in ways we might not even realize.
Well said. I think we've given our listeners a lot to think about today. We've gone from the dynamics of ISTC to its influence on business and even its potential impact on entire countries.
We've seen how technology can be such a powerful force in driving economic change, but also in creating challenges and opportunities that we need to think carefully about.
So as you go about your day, dear listener, I hope you'll keep an eye out for ISTC in action.
Yeah.
Notice which industries are changing rapidly and which ones are staying the same. Think about how technology is affecting your own career and the choices you make.
And don't forget that big question we asked. What happens when countries embrace rapid technological change? Or resist it? What kind of future are we creating? And what role do you want to play in shaping that future?
So many great questions to ponder. And as always, keep diving deeper into the complexities of our world. Until next time, stay curious.